Good morning, and welcome back to Market News. It's July 5th, 2026, and if you were hoping for a quiet post-holiday session to ease back into the week, the market had other plans. We got a split, almost schizophrenic day, blue chips partying, tech sulking in the corner, and underneath it all, a breadth picture that's flashing more caution than the headline numbers let on. Let's get into it. First, the scoreboard. The Dow Jones Industrial Average had a strong day, up 1.14% to close at 52,900.07. That's a solid gain by any measure. But flip over to the Nasdaq side of the room and the mood was completely different. The Nasdaq Composite fell 0.8% to 25,832.67, and the Nasdaq-100, which is more concentrated in the mega-cap tech names, dropped a sharper 1.61% to 29,329.21. That's a meaningful gap between the old economy Dow and the tech-heavy Nasdaq, and a lot of it traces back to one stock in particular, Nvidia. Nvidia slid 1.39% to $194.83, and it did so on heavy volume. More than 142 million shares changed hands. When a stock that size moves on that kind of volume, it drags the whole tech complex with it, and that's basically what happened to the Nasdaq 100 today. Now, here's the part that should make you sit up a little. Under the hood, market breadth was skewed pretty bearish. Across roughly 10,700 symbols screened, there were 34 bearish technical signals against just 16 bullish ones. That's more than 2 to 1 negative. And on the bearish side, several small-cap names, tickers like BFLX, Cello, KTTA, PO, and RNWWW, were flagged as overbought or potentially overextended. So even with the Dow notching a solid gain, the internals of the market are telling a more cautious story. It's the kind of day where the headline number and the plumbing underneath don't quite agree with each other. Let's talk about theme number 2, because it's the story of the day, Nvidia and this growing wave of AI chip skepticism. It wasn't just the stock price action, it was the narrative all around it. Motley Fool and the Street ran a stack of pieces essentially interrogating Nvidia's valuation. One of the more eye-catching angles, Nvidia now trades cheaper than Coca-Cola on some valuation metrics. Think about that for a second. The poster child of the AI boom, now valued more conservatively than a soft drink company, at least by certain measures. That's a striking reversal from where the narrative sat a year or two ago. And it's not just financial media doing the math. Big Short investor Michael Burry, the guy who famously called the 2008 housing crash, is reportedly betting against Nvidia, along with Micron and Tesla. When Burry positions against the biggest AI story in the market, people notice, even if they don't necessarily agree with him. But it wasn't all bearish on the AI side. There's also chatter about OpenAI potentially heading toward a $1 trillion IPO, and the read on that is that Microsoft, as a major stakeholder, could be one of the biggest winners if that happens. Nvidia itself was also in the news for backing security startup Verkada and bringing on a Microsoft sales veteran to lead its own sales effort. So even as the stock gets picked apart on valuation, the company keeps expanding its footprint. And over at Meta, there were reports framing its next AI investment as carrying, in the words of one report, a major catch for shareholders. So add Meta to the list of AI bellwethers where investors are being told to read the fine print before getting too excited. It's worth pausing here to note just how much of today's news cycle circled back to Nvidia one way or another. Whether the story was about ETF picks, rare earths, and the reshoring boom, Intel's long-term PC strategy, or Warren Buffett's own commentary, Nvidia kept popping up as a reference point. A sign of just how central that one name has become to how the market frames almost everything else in tech right now. Theme 3. The Big Money Moves. This was a busy day for capital allocation headlines. JPMorgan Chase authorized a $50 billion buyback and raised its dividend, and it's doing all this while trading near record highs. That's about as strong a statement of confidence as a bank can make about its own stock. Then there's Warren Buffett, who apparently offered up an 11-word warning that's been making the rounds as a piece of investing wisdom worth reshaping your strategy around. Alongside that, we got more detail on Berkshire Hathaway's positioning, a $41 billion stake in Alphabet, and separate coverage framing Berkshire itself less as a conglomerate and more as, essentially, a financial powerhouse wearing a trench coat. Cathie Wood was in the news too, buying $38.1 million of a tumbling megacap stock, a classic ARK Invest move, leaning into weakness rather than away from it. And Bill Ackman reiterated that he's still bullish on Alphabet, Amazon, and Meta. So even with the bearish undertone in breadth and the Nvidia skepticism, you've got some of the most prominent names in investing still finding places to lean in, whether that's Buffett's compounding machines, Wood's high-conviction bets, or Ackman's mega-cap picks. Theme 4, Corporate Reshaping, and this one spans energy, media, and autos. Shell announced its exit from Jiffy Lube, alongside changes to its trading operations and its South Africa retail business, a housekeeping day for the oil major as it continues to reshape its portfolio. Comcast had a busy news cycle on multiple fronts. There's a possible spin-off of NBC Universal and Sky, there's a blackout dispute involving NFL Network, and, despite all that turbulence, analysts are apparently turning bullish on the stock after its 50% decline. That's a name with a lot of moving parts right now, and it's a good reminder that a big drawdown doesn't automatically mean a stock is done being interesting to Wall Street. In autos, Rivian raised its 2026 outlook on the very same day Tesla stock stumbled, which naturally prompted a round of "Is the EV underdog finally a buy?" commentary. And on the policy side, the Trump administration proposed 702 regulatory rollbacks as part of a broader deregulatory push, with names like ExxonMobil, Chevron, and Caterpillar getting mentioned in that context. It was also, of course, just after the 4th of July weekend, and Trump marked the country's 250th birthday with an address on the National Mall. Rounding out the day, a handful of single-name stories worth knowing. SpaceX shares are dealing with lockup expirations and index buying flows following its IPO debut. Apple is reportedly planning 5 new iPhone models, including a $2,500 foldable, a bold price point if that holds. Merck won new approvals for Keytruda after a positive Phase 3 readout for tulisokibart. And Bank of America flagged Delta and United as entering what they called a rare airline sweet spot, worth keeping an eye on if you follow the airline group. And then there's the wild stuff further down the market gap ladder, where the real fireworks were. The day's biggest percentage mover was BCPC, up a staggering 598%. CLRO more than doubled. CWD gained over 90% on very heavy volume. On the flip side, TC, LTX, and LI each fell more than 35%. That's the kind of volatility that reminds you the small-cap corners of this market are trading a completely different game than the Dow and the Nasdaq. Huge swings in both directions, often in names most investors have never heard of and won't remember by next week. So to wrap it up, a Dow that looked great, a Nasdaq that didn't, an Nvidia story that's getting more complicated by the day, and a breadth reading that's quietly more bearish than bullish underneath it all. Big money is still finding spots to buy even as the skeptics get louder and corporate America keeps reshuffling its deck across energy, media, and autos. That's market news for July 5th. Thanks for listening, and we'll catch you back here tomorrow.